Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we are going to be looking at some of the top performing companies in the US. These companies could be listed in the New York Security Exchange or they can be listed in the Nasdaq. Once again, we are using TradingView to filter these stocks. Before we continue, I would like to ask those who haven't subscribed to please consider subscribing. And if you find value in this video, please make sure that you smash that like button. So whenever you are on TradingView, normally TradingView will look something similar to this. You will just see the chart. It doesn't matter how you set up your chart, but at the bottom of TradingView, there is a stock screening option. You can also expand this panel by clicking the maximize panel. Then you will see this whole full panel. As you can see there, we are in the stock screener panel. If you don't know how to find this, we will leave a link in the description for a video where we give TradingView tutorials. As you can see here, at the moment, no filter is being applied. Just ensure that you click on this so that you select the appropriate market. Most of the time we are looking at South African shares, but ensure that you click on USA so that you are able to see all the US companies, not the South African companies. So once now you are in the US companies, then we can start to play around with the information. As you can see, before applying any filters, we are looking at over 18,000 securities that are listed in the US. That is a lot of companies to look at or to even consider investing in, because that guarantees that you will just return the market average. You won't have a chance to beat the market. So while we are still under the overview tab, we can start going and applying the filters until we get the information that we want. Remember, we want the companies that are the top performers in the last year, which was year 2022, and we're also going to try to find some investing opportunities from the previous performers. So first thing first, we need to go to performance. We can see that the performance is sorted by time frame, starting all the way from 1 minute to yearly performance. As you can see here, I've already clicked them to make sure that I filter by year performance. I filter this in an ascending order. Well, I'm filtering this in a descending order, meaning that I'm starting with the largest number going all the way down. But as you can see, we still have all those companies, but we just wanted to ensure that we are filtering by yearly performance because it is the beginning of the year. Don't filter with a year to date because we've only had about 3 days of trading, so this information is going to be incorrect. So once we've made sure that we are filtering using yearly performance, then we can go to filters, then to start changing things here so that we reduce the number of tickers that we are getting there. So depending on the kind of information that you are looking for, you are always going to get a different answer because the answer is based on the question that you're asking. Okay, so now as ordinary investors or retail investors, most of the time we're interested in ordinary shares. In the US, they're also called common stock. So we're not going to look at all these things. We're just going to filter out the information that we want. Right, we are also looking at common stocks, which is ordinary shares. Remember that there are companies that are common stock that act as real estate investment trust. So we don't want to miss those companies as well. So we're also gonna click the real estate investment trust. In this case, we are not interested in ETFs and other things such as preferred stocks. So now, as you can see, we've already reduced this number from 18,000 down to 12,000, but still this is a lot of tickers that we're looking at. So since we're interested in the US, we need to make sure that we choose United States of America. You can just start typing there so that you can also make sure that you go to the right country. There are companies that are listed in the New York Security Exchange and Nasdaq that are not from United States, but at this moment we're only interested in the US companies. You can see now, the more filters we add, the less and less companies or less tickers that we remain with. Remember, in our previous video I spoke about the importance of liquidity, that it is important that whenever you buy or sell companies, you look at companies that are liquid, because that means it is easy to buy or sell those companies. The same thing we're going to apply here. We're going to look for companies that trade an average volume of 100,000 shares on a daily basis. And then also we're going to increase the market capitalization a bit, because any company that is below 50 million can be considered as a penny stock. So we're just going to look at companies that have a market cap of about 300 million and above 2 trillion. So the minimum number that we're looking at 300 million. So once again, we're still left with about 2,400 companies there. Then let us change the exchanges. The exchange that we're interested in are the companies that are listed in the Nasdaq and in the New York Securities Exchange. We are not interested in companies that are trading over the counter, because unless you're an American citizen, if you are not an American citizen, it is not easy for you to trade over the counter companies. So now we're still looking at somewhere around 2,400 companies, which is not a bad thing. So we want those best performing companies, but we also want those companies to pay us dividends. So we're also going to look at companies that have a positive dividend yield. So if you're looking at this, because you can see here, TradingView uses dividend yield or a forward dividend yield. So we're looking for companies that have a dividend yield that is greater than 0. So now let's see. We need to make sure that dividend yield is greater than 0. So I will just check if I need to put in 0 or just need to put 0%. But at this moment, let's just try to keep it. Okay, I cannot add a percent, so it assumes that I assume that TradingView will automatically add that percent there. So now, as you can see, we are left with about 1,175 companies, and then now we can start to get decent information out of this. If you go to the dividend tab just to check if these companies, they really pay dividends, we are looking at the forward dividend yield. As you can see that it is above 0%. Most of these companies have a dividend yield that is greater than 0%. So it means that some of these companies, they pay dividends. You can see that this company here, it says $0, and also the dividend per share is 0. So it means that this company did not pay a dividend. So what we're interested in is the companies that have a dividend yield that is greater than 0%. Then you can just sort out this information. But at this moment, I want this information to be sorted by their performance. So from these companies, we can see that one of the top performing companies is Consol Energy with about 144% return there, going all the way. Let's see the top 10. So up to the 10th company, somewhere around Marathon. I'm not counting, I'm just estimating. We can see that we are still looking at about 66% there. One thing that you need to pay attention to, you can see that we see a lot of energy companies within these top performers for 2022. We can see Consol Energy, Constellation Energy, Occidental Petroleum. We can see this Partisan UTI Energy. There's plenty of energy companies, MPC and Exxon Mobil. So this is not a surprise, but based on this, we can already see that the energy sector was the best performing sector in year 2022. And to just see that confirmation, we are going to use this map. You can see we are looking at a 1 year performance. We can already see that the energy sector was the green sector there. But another sector that is worth mentioning is the healthcare sector, which was also equally one of the best performing sector in year 2022. We can see different companies. There are companies that benefited from the emergence of COVID-19, but some of these companies, they just benefited from that long-term profitability. Remember, Big Pharma is one of those companies that are sort of recession-proof, but that doesn't mean that these companies will not suffer during a recession. So you can see that energy sector was leading there. So if we look at the map of that energy, once again, we're looking at a 1 year performance of the energy sector there. We can see all the different companies, and over their 1 year performance, we can see that Exxon Mobil was one of the companies that was leading, returning about 68%. But this does not just cover the energy sector alone, it also breaks it down by industry. You can see that there's an oil and gas integrated, there's also oil and gas midstream, oil and gas equipment and services. So it's a lot of different companies. You can see that there's also oil and gas and drilling. Some people were talking about uranium last year when the Russian war started. Some people then projected that uranium was going to be one of the best performing stocks or best performing commodity. But as we can see here from this result, uranium was not the best performing there. So at this moment, we are looking at a fact, not just a opinion. And then we can also see that thermal coal performed better. And for South African investors, some investors were invested in Thungela Resources. We saw that Thungela Resources was one of the best performing companies in the Johannesburg Security Exchange. So globally, thermal coal was among the best performing stocks there. And also, if we look at the group over 1 year relative performance, we can see that the energy sector in the US was the only positive sector over a 1 year period, as it returned about 31%, and communication services was the sector that was most beaten, as it returned a negative 38% there. So this is all over a 2022 year period. Coming to year 2023, there's going to be a lot of changes from this. There are different companies, as you can see. Like I said, we shouldn't just look at the year to date because it has only been 3 trading days. The information can be misleading. But if we look at this, we can see that at this moment, the consumer cyclical is leading at about 2.6%, and then the energy sector is now a bit bearish at minus 3.9%. But this is just over a 3-day period. So we'll see how things have been changing. But if we look at over 3 months relative period, that means that we are going back to somewhere October 2022. We can see that things started to change, as we see that the energy sector, it started to underperform, and we see basic materials starting to lead in the US. The basic material, it's those commodities such as gold, platinum groups, and other commodity miners. We've been covering a couple of platinum stocks and gold stocks in our YouTube channel. We're also gonna leave a link to those videos. So we're already aware of this change in that US market, and we're already starting to effect the change in our portfolio. So once again, looking at these companies, we can see that the energy sector was leading, but at this moment things have changed. So you should also, whenever you're looking at these energy companies, you need to take other things into consideration, such as the current chart. How does the chart looks like, and the fundamental information if you're a fundamental investor. So since we saw that there is a change in sector over a 3 months period, then we can start to look over the 3 months performance, so that you can try to find new opportunities in the sectors that are leading at the moment. So once we start to sort these companies over a 3 months period, then the list it starts to change. We can see that the energy sector is no longer the leading sector. Now we see different companies. If you go to overview, because that is where you're going to see which sector is leading, we can see that there's a bit of technology sector there, there's a bit of finance, there is some health services that still remains there. We can see that there's some retail trade, there's also finance, process industries. So from time to time, the market is going to change. It is going to give us different sectors that are going to lead. Make sure that you change with the market. You do not stay with the previous winners. We saw that people made a lot of mistakes. There are people that were invested in the ARK Innovation ETF. Yes, the ETF, it did lead, especially coming all the way from 2020. We saw that the ETF from somewhere around May 2020, the ETF just shot up from $60 per ETF all the way to about $160 per ETF. So we've seen that since then, the ETF has just given back all those gains. The ETF is back at $31.78. Another stock that has been beaten severely is Tesla. we can see that Tesla now is starting to give back all those 2020 gains that it had. Remember, when we saw here, when it broke above $64 per share, it went to reach a high of somewhere around $400. Remember that the share has split. It did a 1:3 split. So before that split, the share price went all the way up to about $1,000 After the split, now the price is normalized, taking the split into consideration. Now we can see that the share price is back somewhere around $113. We are not projecting that Tesla is going to come back to retest this $70 level, but with the stock market, especially if the market weakness continues, then we can expect that some of these companies are still going to suffer. So long story short, what we're trying to say is that don't just stay too long with the previous winners. Remember that the market is dynamic, it keeps on changing every now and then. So whenever you see the change in the market, make sure that you change with the market, so that you're not caught with your pants down. So for year 2023, we're just gonna keep on adjusting on our portfolio, looking at all these things, looking at those companies that are leading, discarding the previous winners if those previous winners are no longer performing well, and then we're going to start adding those companies that are performing well as things goes forward or moving forward. So that's it that I wanted to share with you today. What we did, we just looked at some of the top performing stocks in the New York Security Exchange and Nasdaq, and then we sorted those by, we looked at the companies that pay dividend, because, well, if you are holding a company, the least that you can get from a company is a dividend. And also we highlighted the importance of ensuring that you stay on with the trend. Make sure that you exit the previous winners if they start to lose, and that you also get into the trend or in the new winners as they start to emerge. Don't just sit with the previous winners. That's it for today. We will see you in the next video.